Hello, hello, hello. Happy non-farm payroll Friday. How is everyone doing today? Good morning, Ro. Good morning, Sterling. I'll give you a call this afternoon. Uh, let's see. We've had Williams speaking. We had the non-farm payroll numbers coming out, and Williams speaking. Starting rate cuts is appropriate. Blah 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 blah. I think the market's pricing in a little more aggressive than the Fed's thinking, but we will see. We will see. It's up from there now. It's up from there. It's like, let's just look at that. I mean, look at where this is pricing in real quick. We got 59% probabilities of a double cut, so 50 basis point cut, a single cut then in November, then another double cut in December. So that's 125 basis points currently being priced in. Non-farm payrolls coming in 142, a slight miss versus consensus. Unemployment rate coming in line, better than prior, 4.3 dropping to 4.2. Hourly earnings coming in better than expected at 0.4, which is not disinflationary, by the way. Participation rate ticking up a little better. Now, again, a lot of the jobs were either government and part-time. Average weekly hours ticking up. Again, not disinflationary. So, I think they're celebrating a little too quickly, patting themselves on the back that we've had some miraculous soft landing. And by the way, didn't he also say he thinks that we're going to hit like GDP is likely 2 to 2.5 for this year, and that warrants 125 basis points as the market's pricing in. Those two things don't line up. Yes, the labor market is weakening, and it could very well be falling off a cliff, but we probably need that because you know what? They think inflation is going to miraculously come down to 2%. I think it's going to be stickier than that. So, what else do we have here going on? Thank you for putting in all the news. Yeah, Feds Williams expects inflation near 2% next year. Good morning, Jacob. I think he's going to be wrong on that one. I think unemployment is going to keep climbing. Don't be wrong. I think we could be, above 4.5% by the end of this year. Hey, yes, good morning. So, hello, Charles. Yeah, then the July cuts and the June cuts were both revised lower, and the June cuts was double revised lower the last 2 months. So it was revised lower and then revised lower again. We're back into that, but a lot of people aren't, well, people who know what they're talking about are paying attention to the revisions, but too many things are paying attention to headline numbers. Good morning, but are they going to do a double cut last Fed meeting before an election? So double cut right before an election when they could have simply cut in July and September then with single cuts. Good morning, Royal Palms. Good morning, Anissa. Good morning, Richard from the deep state. So we'll have to see what else. We got Waller still speaking. We get more clarification from him at 11. Then we got some rig counts for crude traders. Other than that, Avgo, Broadcom, market did not like their earnings report, down 6.2%. I again expecting this to reconnect with that 200. We could bounce a bit today, but then I'm watching for rollover plays. Nvidia is still not close below 62.5, but I'm watching for rollover plays after a bounce in there. Pretty much your mega caps are getting bought today after the unemployment report. Let's revise this real quick since stuff's been moving around. So again, it's back to buy everything except consumer defensive because we are in short-term oversold conditions going into a Friday with the major news release that people have been waiting on for weeks out of the way. So, and everybody thinks, here we go, Fed watch. Again, let's refresh this too. Let's just refresh it. All right, so 53 to 47, nearly back. It's dropping again. The market's schizophrenic, but still 125 basis points priced in at this point. Fear and greed still in neutral mode. Uh, where are we with the Schiller PE? Is it still 35.38? Yes, it is. Market still in nosebleed territory. So there's nothing really. We have big lots, but they're already going bankrupt. So that doesn't really matter. So there's no point looking at earnings. All right. Little key area. We came back down. Tapped off the 37.5 area. So here's the two levels I'm watching right now. On any pullback, major support is this 54.70 area, 54.71, 54.70. It's right in here. And then 55.10. We've now above it slightly. So going into the open, I'm watching that to see if that support holds. Next target's higher. If it continues into the open, but it's going to be really critical from my perspective to watch the opening today. We might have a very strong tick in the opening, but if it can't sustain, especially this 55.10 level, then we could get another possible pullback play. From the long side, if it does bounce, then 55.40 is the key area, and then it just missed my targets yesterday of 55.60, spiking up before not being able to hold that level to 55.57. On the bigger perspective, if it does continue to rally, still watch yesterday's high. A close above yesterday's highs could still be a %B buy bounce for a little upside follow through. However, not just for today, but if we take out today's lows at this point, the strong magnet price is $53.95. $53.95. And when I say short term, we were oversold. You can see it here. We're not on the daily, but on the short term, and we have some pretty strong divergences down here based off the 4 hour. But it's going to be very important to watch to see follow through there. NASDAQ, not as much of a bounce still. The key levels, I'm watching a roughly about nearly returning to 50% harmonic, 18,688 area. So that's still going to be key support. Key resistance is 18,950. Above 18,950, 19,2 to 19,217 is the key target on a bounce. That's where that sits. The Dow still has, on a 4 hour basis, a little mini double against a 4 hour rotation zone, and it would just be for a potential bounce play. I want to see where that sits with the little mini harmonic retracements, and that would just virtually, look at that, take it to 62.5. So that's actually a pretty decent potential setup. That's probably one of the ones I'll be watching this morning. But it needs a close above the high of 40,953. And if it goes above there, it needs a 4 hour follow through close. It is against the 4 hour rotation zone, though. And the 4 hour rotation zone recently, spike into it, spike into it, spike into it. It's been very key resistance. So that's why that 4 hour close is so critical to actually confirm it. Russell also just dipping below that 50% harmonic this morning. Key area is 2153. If we do break to below today's already established low, the next support level I'd be looking at is about 2100, 2101, and then critical on a closing basis is 2089. The VIX pulling back just because we had a little bounce, but more so that volatility is coming out of the market with the non-farm payrolls out of the way and nothing shocking. What else do we have here? You're not a Ravens. You live in Baltimore. You know what? How do you even show your face if you're in the Baltimore area? Especially being a Chiefs fan? Oof. Oof. Good morning, Ted. Good. What do you mean good on-farm payroll number? What do you mean good? In what way? Define good. I mean, I'm not contesting you, Coco. I'm just saying define what you mean by good. Good for a rate cut. Good for. I mean, they're not incredibly strong. They're better than last month, but moved my retirement money into capital retention bond funds yesterday at the close, up 12.3% year to date. I want to get past the election and see how the yield curve on inversion plays out. And yes, there's your yield curve still uninverted. Uninverted. Now remember, as this starts climbing closer to 20 basis points, that's generally what starts tipping the market. I haven't talked about that for a couple of years, but I used to talk about it a lot. The DAX still holding the rotation zone yesterday on a closing basis and the 50. So today's low is very key. Today's low is very key for the DAX. If it gives up today's low, I'll be watching a return to about 18,100. The yields spiking, taking out on a little down spike, taking out the lows from August 5th, the panics of August 5th. And yesterday and the day before, we were closing lower than the August 5th low. But what's interesting now with the markets bouncing, we're also getting a bounce in yield. So there's getting to be some buying pressure down here. Not expecting it, but pay attention to yesterday's high, especially if we continue to bounce up and close above it. What else? Dollar index. Look at the dollar index spiking down and then moving back up. So recent key support is holding, and we do have a fully all the way now. One thing I don't talk about is 87.5 doubles versus 75% doubles. 87.5 has higher probabilities. If it triggers, it's a long way off from triggering it. But 87.5 has higher probabilities than 75. 75 is the bare minimum though to qualify. So that'll be keeping an eye on just over the next few weeks, days to weeks, because if it did trigger, the rotation zone would be out of the way on the daily basis. And it spiked down, you see this, and immediately had a fair amount of buying pressure come in against recent low area. Now, if that cracks, if this area cracks, the trend is still down. Don't get me wrong. It's been still against the rotation zone rotating down. But this kind of price action, I'm really going to watch today where the dollar index settles. Because if this low breaks, you could see probably a pretty quick trip to 99.4 and retesting the lows from July of 23. Crude. We had a potential little double, but it's too far extended now to the left key or the right key. Resistance is now about 70.75. No fantastic bottoming pattern just yet, but we are at cycle bottom, so I'm going into next week watching for something to set up on a bottoming pattern. And we're against pretty major support. You see, all the way back, we're at very major support. If this area breaks, though, which I would be surprised on this first move down if it breaks, but that would be markets pricing in a very strong recession. So, no, I don't give out average gains because it doesn't matter. And that would be, I actually can't do that with my NinjaTrader agreement because your results may not be the same. Your trading may not be the same. And it doesn't matter. Your account size may not be the same. And I actually can't do that with my agreements because there's too many disclaimers that have to go along. And if I was going to show that, I need to disclose all my trades. Okay? Because it doesn't matter. People can say anything. That's why companies like NinjaTrader in their partner agreements, they don't want you to do that. And if you do it, you have to have very strong disclaimers around it, and you have to have very specific rules. Otherwise, it just means you're throwing out numbers and there's no context. Is that short-term gains, long-term gains? There's multiple trading accounts. There's multiple investment vehicles. What gains do you want, or losses? Again, I can't do that. I'd violate agreements that I have in place. And I'd be setting people up for very strong. Let's say I said, okay, it's 2.5%. What does it matter? You doesn't mean you can replicate it. Doesn't mean anything. You actually, the people who throw that out, unless they're giving full audited results, audited by a third, it doesn't matter. Gold, a little spike higher, but gold, really pay attention now to the rotation zone on a closing basis. Gold's somewhat running out of steam. So far, it's a sideways correction. You see here it's holding at the top of the rotation zone. But if the daily rotation zone starts breaking and we start breaking below 2,500, we could see a pretty quick trip back to about 24.20 to 24.26. It doesn't matter if you're trusting me. If I start throwing out stuff, there could be people who watch this on demand who know nothing about me. And literally, I just had to re-up the NinjaTrader agreement, and I can't do that. It's very strongly worded in their stuff. If you're going to give out results, you have to have a lot of legal stuff around it. And I'm not violating agreements. US dollar, Japanese yen. Pay close attention to this one too. The trend is still down. We're in major double bottom territory, but the trend is still down. If this low breaks from the 5th of August, okay, pay attention to 140.24 on a closing basis. That would drastically shift everything. We're still between the 50 and the 62.5. This would shift everything on a closing basis below 140.24. That could really start unwinding more of the yen carry trade, which would put downward pressure on our market. Euro spiking up, not hitting double top territory though. Not hitting double top territory. I'm still paying attention to the low from September 3rd. Bitcoin, I haven't looked at this after the non-farm payrolls. Just a little bounce. Ethereum, little bounce, but still be watching for rollover plays in this because we still have the patterns and probabilities say potentially lower. Spiders, trading, we've already filled any potential gap down. The key area on a continued rally is still right around 554.60. That's major resistance. Okay. Technically, if it closed above yesterday's high, it's a bounce play for a % B. But again, if you don't understand that, and I did put the rules in the videos in Discord, so I think it's still there. I think it's still available. And if you don't understand what I'm talking about, then don't worry about it. Key resistance on the Qs is 471, if it can even get that high back up. You have a very strong initial resistance at about 468.35. NVIDIA, still, it's broken below the 62.5, but is not closed below it. All right. Pay attention on any bounce with NVIDIA because it's now going in, shifting into, even though it hasn't closed above the 62.5, we got a negative rotation zone. So pay attention to rollover plays, especially back around 115 area. Tesla, the key level to still watch on the closing basis in the short term is around 237.60. And if that closes above there, then the minor target, is there a gap left behind? There's been a lot of interesting price action in Tesla. with some pretty weak results in the short term, but it is getting back to daily cycle tops and overbought. Good morning, Good morning, Martinez. Oh, you lived in Kansas City, Missouri before Maryland and loved the crowded stadium. Arrowhead does have a good crowd. Were you ever in a game there? Did you ever go to a game there like in December? Can I explain the carry trade? It's borrowing lower interest rates in Japan and then investing in higher return areas. The problem is if the yen keeps strengthening, it puts unwinding pressure on the carry trade. And the carry trade has still been driving markets. It's one of the things with the panic from the 5th of August low. Okay, especially if Japan has to keep raising their interest rates, okay, then that even puts more pressure on unwinding the carry trade because you don't have as much differential between where you're investing. And these are generally shorter term investments, so they have to be re-upped. You're not doing a 20-year investment on a yen carry trade, especially now. Okay, so it means it can start getting unwound and not re-upped, which means when you're unwinding it, some of the overperforming assets, including our stock market, can start getting some downward pressure on it because it's not either getting reinvested or re-upped or downright getting sold. So I'm paying very close attention to the yen. Now, that's why I'm also paying attention to if this double were to trigger, because that would be yen weakening again, and the weakening could happen pretty rapidly. There's some good, I believe, see if there's a channel on YouTube called Eurodollar University. Check them out. I think they might have a really good detailed explanation on the yen carry trade. So I would go to Eurodollar University. Again, I'm not affiliated with them. They actually put out some decent content. And they are a lot of things focused on interest rates. And I would see if they have a video up on yen carry trade, Richard. All right. What else? Avgo. Really, peak AI is in Avgo. Even on any bounce, be watching for rollover plays because the magnet price is around 134 on Avgo in the short term. And then if it keeps going and closes below 128.50, watch out below. You can see that on the weekly. This did qualify for a double. And look at that. Now, remember that first key price is 134. And that is, we could get a bounce, but we'll be watching for that for rollover plays. But if this were to trigger on a weekly basis below this 128.50, you have the 50 week out of the way, and this could unravel quickly and wipe out this pretty rapid rise. Yeah, that's a good, but it's very risky. Think about it. I mean, I know people that were doing that, but when things change, or if things change abruptly, that's where things get wiped out. And in order to get the yen carry trade to work, you're doing it with leverage too. So it's not just the differential, you're doing it with leverage. GTLB. Daily, weekly confirmed double bottom. Let's take a look at the weekly. Yeah. Yep, that would be a confirmed double. I'd want it to trigger on the weekly, but yes, you would have that you would have that daily out of the way. By the way, let me just, if you were personally, this is a little, if you're looking to trade this, you see the 60.06 level, $60. That's the 25% harmonic. Now, it's not part of the double rules, but you see right here how that harmonic comes in with a prior major resistance area. So if this were to trigger, I would use this as a more aggressive, personally, I would use this as a more aggressive stop reduction area. Okay? When you have something like that line up with very key price action, now this is confirmed but not triggered yet. And this is a minor area. You can see secondarily all the resistance here too. So at least if it triggers here, you'll be above that resistance level, so that will turn it into potential support. But I would not ignore this 59, 80 to 60 area. Okay, and this might never trigger. It could pull back first, but keep an eye on that. This would be where I would use discretion just for stuff I've seen all along, because you have major price action resistance there. Thank you for pointing that out, Sterling. Let's take a look. All right. So nothing's changed. This came back down in the little short term to test this 55.10. So that is key to really hold during the opening range. Not as strong a tick as I thought. That's not a strong tick opening. Given the way the market reacted to those numbers, that is not a strong across the board tick opening. So unless it starts spiking above 800, I would be cautious. Personally, I would be cautious on the bullish side. It's got to prove itself to me, especially coming in up into another minor resistance area. Because I mean, it's starting to bounce, but geez, if the tick rolls over and you start getting some selling pressure coming in, pay attention to that 55.10 area, because it's coming into a very specific resistance. Hey, Heinrich, hello and goodbye. All right, that's where we sit right now. Let me just take a look at that, the one I'm interested in. The Dow trading right at that, so it is confirmed, but now it has to follow through with some price action. So it's against some pretty key resistance right now. So it has, for me, if it was going to be played on a shorter term basis, I needed to at least pull back and retest this level and then rotate back up and follow through then with a 4-hour close. All right, that's where we sit. VIX has lost a 20 handle. It's almost lost a 19 handle. Volatility coming out pretty quickly. All right, with that, everyone, have a fantastic trading day, and I shall talk to everyone next week. Bye for now.